So
Yeah, so let's talk more about lenders. How do you finance something like this?
yeah, absolutely, man. So and this has actually been the biggest part of the whole journey so far in the last couple of years is I've probably talked to 300 lenders at this point. You had someone from sorry, I forgot his name, but from Host Financial. I had recently talked to him, and phenomenal company. Uh, that's who we're using now, and the reason we're using them for the 6 projects next year is because it is the only company I've seen so far that will look at air DNA projections, not just there are some companies that will lend on vacation rentals with like if it already has a history of being rented out. But Host Financial, they didn't offer them last year, and I don't even think they offered it like 6 months ago. But they do offer construction loans now, and they will underwrite the property based off of those projections. They'll look at your credit, but they won't really look at they won't look at like your income or anything. They'll just look at how much the property can rent for. It's called a debt service coverage ratio. They just look for a specific number there, which is phenomenal. That's no other lender is doing it that way. When we first started, we actually just got a normal home loan. We were intending to live in the property, not intending to live, but we had told the lender that we were going to intend to live in the property. And then I got married, and we just ended up we wanted something a little bigger. But you can start with a regular home loan. I've done a video on that too, where I discuss how you can get a home loan, sort of live in it for like 6 months and sort of step away from it as long as the lender is getting paid. Honestly, I don't really see any bad thing about that. The lender will check up to make sure that you've actually moved in on the house the first like month or so. But like, I mean, life changes, things happen where it's like you can move away, and it's like I've heard of that's like sort of like the bigger pockets like thing with like the Burr strategy, where it's like you purchase like a threeplex and like live in one and rent out the other two and eventually move out. So it's the same idea. So it's like people get a little touchy sometimes when I talk about that, but I mean it's the same idea. People have been doing it forever now, last like 20 or 30 years.
I've always wondered what is that brr strategy? What is the abbreviation? What does it
Put me on the
stand for?
spot. Buy, renovate, rent, and refinance. Yeah, that's it. Yeah. It's a strategy that I guess became popular with bigger pockets, where it's like purchase a property, rehab it, rent it out, refinance it, get your money out, and then continue to rent it. That's a
Okay.
phenomenal strategy. You can do that with that's essentially what we're doing with the vacation rentals. We're building 2 units at a time, per plot, and then you can live in one of them. This is the strategy. If you're just starting out, say it's like Host Financial won't underwrite you, but you can get a loan. I'd recommend like building 2 little properties, living in one of them, rent out the other one, and then once the money starts coming in, maybe live in it for like 6 months, and then move out and rent out both of them. That's another thing.
Yeah.
That's very powerful stuff. Yeah.
Yeah, that's
Um,
cool that you use the Host Financial. They're good friends of mine. So shout out to Adam and Daniel
yeah, Adam.
at Host Financial. Actually, they were on the podcast episode 315. So if you're listening and you want to
That's
know
how I
more
found
about,
him.
oh, that's how you found him. Oh, that's
Yeah,
awesome.
I found it through you, and I called him. Adam got on the phone with me. Man,
Nice.
he's one of the leaders of the company. So,
Yeah. I remember I had beers with him in San Diego
oh really?
before COVID happened,
Yeah.
when that was still allowed. Yeah. So